Well, guys, you know the story. If you have questions, you just have to pop the questions in and I will get to them as we progress. Okay, here we go. Allow, yes, I want you guys to share. All right, excellent. Thank you, guys. So, we are at a very interesting time in terms of the year, as far as we are concerned as traders. We are peering into the last quarter of the year, and there are key magnets and targets that are going to be driving the market. So we need to know what those are. So I'm going to use the daily chart, and I'm going to work through, I don't know, 8 or 9 markets, and let's see if we can get to them. Now, if the market that you trade is not here, you're going to have to just follow the same principles that I'm going to share with you. They're pretty uh, straightforward as far as trading price action is concerned. Now, it doesn't really matter how you trade or how you're being coached to trade, what strategies you use. These targets I'm going to share with you are not just for price action traders like me, but are for the whole market because they are what the market is showing us. So we're going to the end of the year. I really don't care actually about the fundamentals or what other patterns or seasonals or anything else. I'm interested in seeing what is in front of me. Now, having said that, and I repeat myself, everything else, all other strategies you are using, all other approaches you use, fundamentals, seasonals, pivots, whatever, everything that you use based on how you've been coached and trained is absolutely relevant. You have to take what I'm going to share with you and kind of edit in as another view of looking at the markets. And hopefully, it will help you in filtering out low probability trades and keeping you focused on higher probability trades so that you can make more money in this last quarter than you did leading up to the quarter. Okay, having put in that disclaimer, I'm going to get started. So I'm starting with pound USD cable. Very important, guys, as we are going to the last quarter of the year. That's why I'm just emphasizing the last quarter of the year. Everyone comes out, the bears that have been hibernating are coming out, the bulls want to come in and rampage, everyone is in, countries, government, institutions, whoever is holding short position, long position, everyone is in, very interested to see. That's why it is absolutely important. So just having a look at the market. This is 2025. This is the low of the year. You need to have that marked on your charts until we've gone past 31st of December. It's a key level. Everyone sees it. You've got to see it. That is the low of the year. And the high of the year so far is right up here. That's the high of the year. So that's all you got to do. I mean, you can just write it in, high of year. Hoi. High of year. It's this year. That's all that I've got right. So I don't have high of last year or 20 years ago. Let's just look at what we got. And we've got the low of year. Boom. These are absolutely key for you to have on your charts. I've taken out moving averages because you're going to have a long debate. Dr. George uses this, Coach A uses that, and Coach B uses that, which is the correct one. Use the one that you have been coached on. That's perfectly fine. Just for us not to get confused or cluttered, I've removed all the EMAs, just looking at the action of price action. High of year, low of year. Then another key level you have to mark into your charts is the midpoint of the range of the year. I know you all got the answers. Why is this important? Think it through in your mind. If you don't, once I say it, you're going to say, oh, that's pretty obvious. Yes, price action is very obvious. Now, why would that be important? Well, very simple. We had the low of the year, the high of the year. The bulls did a fantastic job over the last 9 months, just going up from the low to the high. Whatever took place in the middle took place. That's what the bulls did. And now everyone at the moment is saying, oh my goodness me, the bulls have been strong. Now, if you are a bear and you believe that this asset is now ready and primed to be sold, what is a key indicator for you that you, as the bears, collectively are taking over the market? Well, if you can break through the midpoint of the range of the year, then everyone says, oh my goodness, the bears are strong. They have broken through the mid of the year. It simply means the whole range of the year now is going to be controlled by the bears, because if bears break out beneath here and close beneath here, they have completely erased the bulls. And if you were to look at the yearly candles, if you had to look at the yearly candles, if you can find a yearly candle, you would see, if the bears break out beneath here, a tail on the yearly candle. Okay, because we went up, we're coming back, and now we are creating a tail. And of course, they want to keep going down until we get all the way down here, break through this low so that it ends up as a bear candle on the year. Okay, so somewhere within here, the market opened. Well, this is January. We opened within here, open there, sold off. So the bears want to get down to here and end up with a huge tail, the small bear body. And if they can break beneath the low that was created in January, everyone's going to say, sell, 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 sell the cable. Isn't that fantastic? Whenever, if you want to know which market is trending, just watch, which I don't do actually, because it just confuses my mind because I don't trade fundamentals, but I can hear all the clutter when I happen to stumble into the news. If the bears break out beneath here, oh, the cable has crashed, we should all be selling, we should be making money, it's just gone. But, you're like, hang on a second. The cable has been crashing since here. And they go through there. And they go through there. They've been crashing all along. Once the moment they smash through there, and you want to jump in towards the end there, chances are you may not make a ton of money. You're going to have to just manage things dramatically. But we're not talking about strategies. So, key level to watch, guys, you've got to have on your charts: high of the year, low of the year, and the midpoint. And you got to keep them there now. Okay. Do not take them off. Do not delete them in the last quarter. So this is the midpoint of this year's range. Now, if the bulls come back and we accelerate up, anything is still possible, right? Because what do the bulls want? The bulls are saying, man, fantastic, we had this beautiful range. We have to defend the midpoint of the range of the year. If the bulls can defend this successfully through, end of September, October, and they start to accelerate up or explode up, bulls want to get above here and just keep going up into the heavens. But these levels, stay. So if we get the bulls coming in, let's say we get a huge bull candle here, then all you got to do is change it, right? That becomes the new high of the year, and you adjust that, because that then will change. Okay. But the exciting thing is, if you trade in nicely and quietly, and then this pops up this thick green line, you just know, oh my goodness, we're near the high of the year. We are in the last quarter. It's either going to be defended heavily by the bears because they don't want the price to go any higher, or the bulls are going to say, here's our opportunity. Let's just, push this market up higher by the time we get to the year. So we start the year with everyone saying bullish, 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 and we keep going up. So we've got to get into the psyche, into the thinking of the market, because these levels are absolutely key. Then, of course, you've got the key levels. Have a little look and say, well, what else is nearby that could be a concern that I should watch out for? Because, that's the key level. Before the bears can get here, they have to get above here, beneath here. Why? Well, it's obviously a key level. There's a higher low, there's a higher. There was one who broke up beneath it. There's no drama about it. It's there. You can see it, right? So there's another level that you need to watch out for. Doesn't have to be that thick. I'll just make it thinner. So these are levels that now must remain on your chart. It doesn't matter what time frame you trade in, because if this starts to pop up, when I'm trading, I'm in the last quarter, I'm going to say, oh, what is that? Why do I have that on my chart? I go back and I say, oh, okay, there's a key level here that, the bears try to sell off. They defended, the bulls defended, and we might get down there again. I mean, now we've got other levels. So if you're trading the daily, let's put it in. There you go. There's another level. That's all you're probably going to worry about, Now, as price begins to unfold for you, if we get to here, so we get a bear candle Friday, we get bear candle Monday, and we start to break out beneath it. You've got to ask yourself the question, what is the target for the bears? Remember, I've spoken about it many times, but hopefully you can find the videos in the archives. If not, here we go. The bears break out beneath here. Let's do this so that let's say Dr. George, why don't let's get the right one. That makes it easier for everybody. Okay, so let's say that's our friends, the bears. So when I work through the other charts, I'll be a little bit quicker and lay it out there. So let's say the bears do that. Oops. And over 2 days, they start to do that. You've got to ask yourself, what is the target? What are the bears trying to do? Well, I know there's that level. I know also there's that level, but there's a bit of a range here. So if we're breaking out beneath the low of that range, from that low to that high, I mean, it is not a surprise, guys. If you see the bears trying to break out beneath you over the next couple of days, do not be surprised. But you must say, yes, opportunities for me to find ways to get in the market short, because they're targeting that level. Not a surprise. Why are they taking that level? Oh, let's rewind a few minutes, and I've told you why they'll be doing that. So then you got to follow your strategies. And if they allow you to get into the market, then you got to get to the market and target that. So we're talking targets. And of course, if the bears do the same thing here, how many days? Who knows? Oh, here he goes again. It's a Sunday. I'm going to have a coffee. Pick up the right one, Dr. George. So let's say they do that. Follow the same thing, and you can see that target. And now you know, okay, we had this bigger range, this low and that high. If the bears are showing you strength, breaking out, pulling back, breaking out, you know they want to get down to this range. Now there's even more evidence to find ways to get into the market. And then it carries on like that. If the bulls are strong, you're going to have to wait for the bulls to break out above here, for you to start to say, well, if bulls are strong and now they're breaking about here, where do they want to take the market before we close the year? Okay, so if we didn't have that, and instead, we get here and we fail for whatever reason, and the bulls start to come back, the market can do many things. I'm just showing you the thinking processes that you need to go through. The bulls start to come back, and you're going to say, if the bulls are strong, we want to break out above here. But the objective is not just to hang around here. What's the point? If you're strong enough, go for the measured move. If they want to get to that level, then if your strategy calls for it, you can buy. All right. So let's follow the thinking and keeping my eye on the clock. Let's look at another currency pair, yen. Same thing you have to go through with all your charts. Traders, just have a look at it and say to yourself, okay, what are the key levels? There's 3 key levels you need to have. That is the high of the year. Yes. That is the high of the year. By the way, do not worry about, correlation. The pound is correlated to the yen, because if you dig into it, you say, yeah, but not always. And then there's 60% and there's 40%. It's not like one to one. Just look at the price action in front of you, and then look at the strategies that you've been taught to trade with, and then trade with that. High of the year so far, low of the year. You type it in, write it in, and you find your midpoint. Now, this one is interesting. Well, they are all interesting, but there's something here that you need to look at. Remember the cable, we say the bears would like to just, decelerate that market down to zero, make the pound worthless, but they have to get through. They have to get through the midpoint. But here, we've already danced around the midpoint. Now, what does that mean, guys? All it means is for you, bears were strong to come and create the low of the year. Bulls were strong through all of this stuff. Bulls were strong to get above the midpoint. But look at what took place. I mean, the day after they got above the midpoint of the range of the year, the bears just came screaming out and said, we refuse. There's no ways you're going to push this market all the way up. That's what took place. That's what happens. And you can't be surprised, right? Say, oh my goodness, look at what happened. What happened in the yen? I don't know. Something happened, the news, whatever. It really doesn't matter what took place. What we've got to see is what is taking place in front of us. Remember, please underline, this is purely from a price action perspective. There are strategies that show you how to trade around these things. I'm not even delving into that because I'm clueless. But as a price action trader, I need you to start to see things. So when this happens, you don't get surprised, right? If you are trading this and you saw the market going through the midpoint and you wanted to just buy the close, if you put your stop here, you're just going to burn for no reason because you forgot that we're trying to break out above the midpoint of the range of yesterday. So your stop needs to be far away. That's all price action tells us, right? Now we are just hanging beneath here. That is a key level as far as this market is concerned, that key level. The big fight over the next few days and weeks as we go into the end of the year is, are the bulls going to be strong enough to get above that level, their first attempt? Are the bulls going to be strong enough to get above their first attempt? There. Because that's what the bulls want. They want to get above there. They want to follow through candles, and everyone's like, okay, let's buy the yen. Can you see what's happening in the yen? It's weakening, it's going up, it's going. Just think of it as going up, whether it's weakening or strengthening. Who cares? The yen is going up. We want to buy. Okay, that's what they want. Now, if they do that, you can simply say, well, how far do they want to take this? There is a high of the range. There is a low of the range. The bulls would want to get above here and they want to get to the measured move, which gives them an opportunity to control the year and end up with a bullish candle. But they will always want to just get a little bit higher and get over it. That's their objective. But of course, because we're all in the midpoint, the bears are saying we are so close. Come on, guys, we are so close to controlling this currency pace that the year ends up being bearish. The bears, all they want to do, well, or they've been trying to do it and failed. The tight trading range just shows everyone. Doesn't mean there's no volume in the market. There is huge volumes in the market, but the battle is on. The fight is on. The bears want to win, the bulls want to win. So as far as the bears are concerned, they can see that you as price action traders plus your other strategies can see that. Now if the bears break out beneath here, where do the bears want to take this? Even without putting the measured move, you can clearly just see by your eyes their attempt is There is the low of the range, there is a high of the range. So, not a surprise that if the bears break out beneath here, they want to put a measured move to get to test the low of the year, and then they want to just smash through this and go from 140 to 1, whatever it may be. Okay. Targets, guys, targets, targets. So don't trade blindly and just rush in. You've got to see these things, got to see where to put your targets. That's what I'm trying to get to. Okay. Do I have questions? I do not have questions. I'm going to look at an index. Ah, my goodness. Let's choose German 40 purely because of time. If you have questions, pop them in so that I can get to them before we get to half past. Ooh, thank you guys. Coffee. Okay, so same thing that you must do with every market that you are trading. Now, why am I saying every? In case you've just come on, because we are getting to the last quarter of the year. These key levels are going to be significantly important for all markets. There's no way around the price action as we are going to the end of the year. You cannot ignore it. You cannot wish it was not there. Law of year, it is there, and you've got to see it as object name. Law of year is already used. Okay, let's not call it anything for the sake of time, but we know what it is. Thick red line, law of year. Law of the year on this market. Then you just got to raise your eyes and see, okay, there is the high of the year. And I use red and green just to follow my candles, right? And then the third level you need to have, guys, is the midpoint of the range of the year. I mean, you saw how it's controlling the market on yen. I mean, whatever else you hear coming out of the news is pretty much reflected in the fight going on there. Here we are with DAX. Ooh, let's not do that. What do you see? Well, from what I've been speaking about, key level high of the year, key level low of the year. The bulls want to get above the high of the year so that the market ends up bullish and they come back from break in January and just going to buy, having drinks with their friends. We're just going to buy. But the bears want a miracle to happen. It doesn't take much, right? This is like 3, 6, 7. Bears just want out of the 90 days left, 100 days left. They just want to just keep going down here and get down here, get beneath the midpoint and convince the market, oh my goodness, we are bearish. So that we open the year selling, or if even better, they want to get down to this level, break through the low of the day. So this is a daily chart that I am looking at. And there are key levels you need to leave on your charts. Doesn't matter what time frame you trade, like I'm trading the 1-5. I now have these on my charts, just left in there hanging. When I get to this blue, I say, oh, why do we have a blue line here? George, open up. Oh, it's the middle of the year, and see the drama unfolding. So if things start to happen there, I'm not like, what's happening? I will know exactly what's happening or know the reason that things are happening. All right. So what are the key levels? Well, there is a key level. You can see that higher low. From there, the bulls reached out. So again, the bulls are strong. They want to get up to here. And if the bears are strong, they want to break out beneath here. So we kind of, yeah, let's do this. And then I'll look at questions and hopefully everyone will have clarity. Yeah. You see what's happening there? Let's change it. Let's put the right colors in. I mean, hey. Where did that come from? Oh my goodness. Huh. Okay. So if the bulls are strong, we know the story. They're going to look back and say, well, hang on, we're strong enough. We created a trading range. For 4 or 5 months of the year, we've just been fighting and fighting and fighting. And now we have the opportunity to accelerate up. And because we are so strong, we just gonna take this market to its measured move all the way up. 5 minutes to go, all the way up to these levels. That's where the bulls want to go. If they can gather enough strength and forces and start to move, and all the other bulls who are hanging by the side will start to say, oh, the market is going up, the market is going up. Let's all jump in. And then all the other traders come in, fear, FOMO, everything. The market just goes up. Alternatively, the bears are eyeing this and saying, have a look, guys. Up here in June, we had a new high of the year, all-time high, if I am correct. It is actually the all-time high. Yeah. So we got the all-time high here, and we just crashed down from there. The bulls came back again, gave us another all-time high. We've gone sideways, gone sideways. They have failed. So the bears are gathering strength, and their target is here. We are in the middle of the high and middle of last year. So all the bears want to do, not all, they've got a lot of work to do, right? But they want to start to break out beneath here so that traders can say, hang on, is this what's happening? Back, are we just going to crash? So let's join in and crash, or let's get out of our long positions. If they do that, if they can break out beneath here, the obvious target, the first target is going to be the middle of the year, mid of the year, the 50% midpoint of the range of the year. And then, of course, when I get to the measured movement, once they're in there, that's when you start to see these big breakout candles, boom, exploding, because now everyone says we're going to crash. And the market is just going to keep going all the way down. All right. So are there any questions, traders? We've got 3 minutes left. Is it all super clear? Are there any questions? I don't see questions. Let's see if I can squeeze in gold. Everyone is talking about gold. Very same principle. It is just a chart. It is just a market. Don't get lured by the beautiful prospect of the gold rush. It is just a market. Follows the same. That's the beauty of price action trading. Doesn't matter what the market is or what the hype is. Same principles. Now we are at the new high of year, all-time high, etc., etc. What do you see, guys? What's obvious here? Well, let's put in the key markers. There is a midpoint. There is a midpoint of the year. Now, I'm going to do something and ask you just to follow me to illustrate everything that we've been going through. So that's the midpoint. Key levels you can see is the level here that's been broken above, not broken about. Who's broke out above that level? So, of course, the bears would like what? The market to come back and test that. That's the key level. Now, let's do a little scenario playing, guys. Pretty easy. This is where we're at. We'll get back to there. When we were here, that was when we were here last month. That was the high of the year and the all-time high. And the midpoint was down here. There. That was the reality. So the very same principles I've been talking to you about the other markets just unfolded so pristinely, so beautifully. So no one should have been surprised with gold. I don't know who made money through here on the daily chart. You know, if you got storage, you trade that, fantastic. If you don't have, fantastic. Just let it go. Now, when you were in here, you saw the midpoint of the year, you knew that the bears are saying to themselves, all the way through here, man, there is a key level, but here we have a key level. If we break out beneath this low, that's the bears, we can take out the midpoint of the year. That's what the bears wanted, right? Every time they saw that, they said, okay, there is a high of the year. If we break out beneath that level, we can get down here. The bears wanted to break out beneath exactly what we were talking about. But we also said the bulls are strong. What are the bulls saying? The bulls are saying, well, if we're strong, if we can just break out above here, we then want to go to a measured move. I mean, I didn't make this up. This is what the market does, right? So the bulls wanted to break out above here. If your strategy allowed you to get in here, fantastic for you. But the target, if you break out above here, is what the bulls were looking at. And look at that. The bulls have gotten to the target. Do you see that, guys? It's very simple. You've broken out above that as a bull. You know you want to get to the measured move. You know where to put your stop. You get into the market. Aim for the measured move. Easy. Doesn't matter it's gold or people are rushing in. I don't know. Risk on, risk off. Who cares? Price action. There, as pristine and as clear as it gets. That's the target. Bulls say if we break out from the breakout, there is a target. First level, second level. Targets. Easy. Bang. I think for the guys who follow my trading, I posted something in our group. We had something on DAX. Simple. In the day, break out, reach measured move, take your one-to-one, go home, go on holiday, do whatever. That is exactly what took place. And now, of course, we now have a new high of the year, and we go through our processes, middle of the year, blah, blah, blah. But it is pristine. It is clean. Very straightforward price action levels and targets, and that you can see. High of year you can see, low of the year you can see. You can't see midpoint, you got to draw it in. You can't see the targets of breakouts, you got to draw them in, but it is all there. All right, guys, enjoy the last quarter of the year and create wealth, build wealth wisely. Enjoy the process. Sam, thank you for hosting. Guys, have a fantastic rest of Sunday. We will see you again. Dr. George, bye-bye.